Hi, I'm Rich Wynn.
And I'm Rebecca Nixon, and this is the PropTech Growth Podcast.
Every episode, we interview an expert in the PropTech startup space, gathering their advice and expertise to help you run a successful PropTech business.
I'm the Portable PropTech CMO, and I help PropTech startups build and scale their commercial growth strategy.
I'm Rich from Rich Wynn Consultancy. I specialise in operations, sales and process, helping fintechs and PropTech companies to grow.
I started off in sales and marketing, did that in insurance for a while, and then I moved into banking, and then I did a whole heap of different jobs for Lloyds Bank. And I ended up being the chief exec for Asia for Lloyds, and I ran banks in Hong Kong and Japan and China and Malaysia and places like that. And it was a super interesting job, very fortunate to do that. I was in the middle of the financial crisis in 2008, 2009, which made it quite interesting. I wasn't a natural banker at that point, I'd say. And then in about sort of 8 or 9 years ago, I came back to the UK. I was having a family at that time and fell out of love of big corporate, is probably the best way to say that, and decided to venture into the unknown called entrepreneurship. And I decided to set up MQube.
And so what is MQube for people that do or don't know?
So MQube is a tech business. Yeah, we specialize in artificial intelligence and deep learning. We focus in the mortgage market at the moment, and our aim is to highly automate, if not fully automate, the mortgage origination process. And the idea behind this is to, if you think about most borrowers, most house owners at some point have a mortgage. They don't want a mortgage. It's a necessary evil to buy the house of their dreams. And really what we're all about is we're trying to make that as simple and as certain as possible for those borrowers and really bring that into the modern age. So my belief is that you should be able to get a mortgage as fast as you can get car insurance on one of comparison sites today. And that's exactly what we're trying to deliver to the market.
Oh, wow. And so you're a tech company, and are you a lender or are you a broker?
Yes, that's a good clarification, Rick. So when we set the business up, I decided that when you start any business, you have a strategic goal. Do you want to be an operator or do you want to be a service supplier? It's a very big strategic goal. And I looked at the problem of mortgages. I looked at the deployment of technology into banks, to highly regulated entities, particularly around AI, and it was really low, very poorly done. And in reality, I decided that we should be an operator, and that means we could perfect technology in real life, and we do this now. So we are a lender, and there is a brand in the market called MPowered Mortgages. This is the brand for MQube, and this goes head to head with Halifax and HSBC and Barclays and all the big lenders, and we offer this very similar products, very great similar pricing, but super keen and slick tech to support the process behind that. And behind the scenes of that, we're perfecting our tech, deploying it into real life. But we also then have the MQube business, and the MQube business is a technology business that has customers in banks and building societies, and we sell technology to them, licensed technology to them, and support them in their ability to deploy artificial intelligence into their everyday working lives.
Amazing. So with artificial intelligence, obviously most people have some sort of idea of what it is or what it could be. You've been working with it for the past sort of 6 years or slightly more. What do you actually do? Like back end, without obviously any trade secrets, back end, what are you doing that is making it as good as it is that high street banks want to, take your SaaS offer, but you're also lending at the same point. So what is it that you perfected or are perfecting that other people haven't done or can't do?
Yeah, I'm a banker by trade, as I've said, but as a CEO of a bank, I would have struggled to spell AI, let alone know what it really meant. And over this period of time, you're right, I've now started to understand the commercial benefits of this and the problems with it. And it is very simply just misunderstood by large parts of the commercial community that don't actually specialize in the coding or development of it. And so therefore so we should just demystify this bit. The AI, you can use different types of AI, and there's a lot of talk about ChatGPT at the moment and generative AI like that. And of course, we use lots of large language models, which is what that's built on. But we produce AI pipelines to perform very precise functions. It's like a laser approach. And what that allows us to do is to do certain functions, and I'll talk you through what they are now, but we do them at a very high performance level with an extremely high level of confidence. And it's transparent. So therefore, we know exactly how we are getting to the results we're getting to and to the confidence scores we're getting to. And what that does, that allows us to deploy it into highly regulated environments safely without causing audit problems or misunderstandings or unforeseen consequences into that. It's a very precise approach to do that. So what could we do? So if you look at a mortgage is a data problem. So you get a mortgage application, and many people who are listening or watching this will have done that. They fill in an application form where somebody could take them an hour, could take them 2 hours. They submit this into a lender with some documentation, and kind of 3 to 4 weeks later, they'll get a mortgage offer back. So what is really happening behind the scenes here? So in that process, what's happening is data's being collected. The application form is a manual entry of lots of information. Some of which can't be sourced anywhere. Do you have children? What are their ages? Private school, public school type stuff. And some of it is what property is it? How many bedrooms? And all that information is actually publicly available. And to submit this, what we do is we use a variety of different technologies, AI included, is to create a holistic machine readable object uniquely for any customer, for any property, for any situation. So therefore, if you produced a bank statement, for instance, or a pay slip, and you photographed it and you uploaded it onto our system, we would use AI to identify it's a pay slip, extract all the data off it, categorize all the data, and put it through a decision underwriting engine to come to a decision on it. And that decision could be, it's the wrong pay slip. So therefore, it's the wrong month. And immediately it would flash back up on the screen to the borrower or their mortgage broker, you've given us the wrong payslip. Please give me not September or whatever the thing. And it all becomes interactive and real time. Now, what lenders are doing, that payslip's going into a lender, a human being is looking at it and going, it's a payslip. Oh, and it's September, not October, sending an email back to the borrower or the broker saying, can I have the right one, please? What we're doing is we're automating that process. And we're allowing the borrower or the broker to self-serve themselves in real time, because we're using AI to assess all the data, augment all the data in real time.
So what would you say is your sort of biggest challenge with this? Is it because obviously there's so much data out there, but there's a lot of wrong data, and this is something in the property space with can't remember what it's called now, the steering group for technology and within property, and basically trying to get back from 6 months to completion to 3 months completion or 2 months or yes. There's so much data out there for property, but nobody trusts it, and so it's not going to work in that respect. So how do you filter out good data from bad data, or is that your biggest challenge?
I wouldn't say that's our biggest challenge, actually. So I'm actually going through the mortgage process myself. I'm actually buying a house right now, and I can't actually have a mortgage through my own business because that's not allowed by my investment agreement. So I'm now dealing with the top 6 bank at the moment and having this experience. Think about the mortgage process in 2 moments of truth for a consumer now. One is the day I get my mortgage offer and I really know I can buy that house. Everybody in the process relaxes. Nobody's going to try, and the gazumping process calms down a lot. And the second moment of truth is the day I move in. Everything else is annoying noise in between. And the second one is all about the conveyancing process. So we're not focused on that problem today. We will be focused on it in the future. But today we're just trying to fix the first problem. Get everybody certainty and control around that mortgage offer. So typically, an average mortgage application for a person takes 1 to 2 hours to fill in. Ours takes 10 minutes on average. In that, we collect around 19,000 data points uniquely for that customer, for their situation, and for that property. And that is done within that 10-minute journey. So they're actually just giving us information that is either missing or inconsistent. So to give you an example of your point there, which is like we pull 1,300 data points on the property, one of which will be the valuation. The other ones will be how many bedrooms, freehold, leasehold, flood risk, H2, and all that type of stuff. And it all comes in. And now if that data comes in and it's missing, inconsistent, or hits a low confidence score, the system generates a question to the borrower or the broker to say, please fill in this gap. So immediately we're getting them to self-serve the process, because they're really the only people in the whole process that genuinely know that data point. It's a bit like your payslip again. If you upload your payslip, we want to know what is your fixed pay and what is your variable pay to meet regulatory standards. So we're reading automatically your payslip, and if we get a confidence score that's low, when we don't know if it's variable or fixed, a question will appear in the journey and say, can you tell us if this £500 payment is a fixed or variable element, please? So our 10-minute journey is completely dynamic, it's completely individualized, and it's different every time for every customer, because what they're doing is filling in the gaps for data that we have not been able to collect, again, because some of it's not API-able or read from documents. Children is a good example of that. Or it's inconsistent or missing from the 28 APIs that we typically call in that 10-minute application journey.
Okay, that makes sense. And are you, I should know this, but I'll ask anyway, are you just through brokers, or do you go direct to consumer as well?
No, at the moment, the Empowered Mortgages only goes through brokers. 91% of mortgages are broker originated, and as a new startup business, there's no point trying to push water uphill, and fixing the broker problem is a key part of the process. So we are working with lots of brokers. We work with all the big brokers around trying to innovate their journeys and make this quicker. We create innovative AI tools for their deployment, and they use this independently. So one tool we give to brokers, this means a broker can just type in, I'm 38 years old, I'm from Switzerland, I want to buy a property in Manchester for £300,000, and I've got a default on my default CCJ. Will you lend to me? Type it all, and it immediately will come back with their answer, yes, no, and what evidence would we need for that person. And therefore, we give these tools to brokers so they don't need to phone us up, and they can immediately 24/7 get access to that. And we use generative AI to create that experience for them. So there's many things that we're doing in this journey to try and really simplify the process and help the incumbents transform their business. And I'm a big believer in not using the word disruption. Disruption is not the way to change the mortgage market for the betterment of borrowers. The best way for them to create best customer outcomes, borrower outcomes, is to work with the incumbents to help transform their business. Work with brokers that give great advice to these people, help them do the heavy lifting with AI, help lenders make better decisions, collect more data, be more informed to make a more informed decision on whether a loan is suitable or not for an individual. So working with people is far more impactful than claiming to be a disruptor and stealing market share or trying to do these things in the mortgage market, in my opinion.
Yeah, definitely. Rebecca, anything to ask?
Yeah, I'd love to hear more about your go-to-market strategy. So if you're targeting brokers is that your primary target? And then from there, they build the relationship with the end customer. Is that correct?
So for the empowered mortgage business, that's right. So we work with probably 90% of brokers in the UK now. So we have commercial agreements with them, and they will be able to access our full range of products. And we have a sales team and a marketing team out there at the moment, pitching our words, promoting our brand, convincing them that we're the best lender for their particular customer. And then the MQube business is a different type of business. It is a more SaaS business. Our customers are banks and building societies and institutions like that. And we have a different type of relationship when we are supporting them with technology and AI services. And of course, that's a different go-to-market strategy from the broker piece. And so there's two businesses I run, and they are distinctly different, albeit the technology is the linking pin between the two.
No, I can see that. That's really interesting. So do you have, obviously there's two businesses, the way that the businesses are set up, do you have two separate sales and marketing and tech teams, or do you have overlap between the two? How does that work?
So it's a bit of both. So there's core teams in the business, and they focus on either technology development of the core platform. And then there's people that work solely on the empowered mortgage business. And then there's people that work solely on the MQube business. So it's a bit of mix and match with that. But we're a small business. We employ 69 people in Guildford and in Leeds. And as every good startup is, we all muck in. There's no such thing as a perfect role. One day you're doing this and the next day you're doing that. And that goes for me and everybody else in the business. But there is separation, but as every small business, it gets blurred.
Yeah, that's understandable. That seems to happen a lot in startups. In fact, I don't think I've worked with a startup that doesn't have that going on.
No.
It keeps things interesting. Never a boring day, right?
Never a boring day, and very unlikely to have a similar one either.
Yeah. Oh, sorry, go ahead, Rich.
No, so I was just going to say, which one is your favourite to work on, or does that change daily?
Do you know? I don't look at it like that's a different question. It's, do you know? So this morning I've been arranging how we're going to demo AI services at a conference, one of the biggest mortgage broking conferences in the country, and that is like really exciting and super interesting, because the whole premise of that is, let's show mortgage brokers today how their life can change today. How do we just make their lives easier? And that's a really cool thing to do. And that kind of excites me in that stuff. And then literally the next phone call after this is going to be a 2-hour meeting, a technology meeting with a very large building society, talking about their needs and requirements. But that's equally as interesting and challenging, but in a different way. So I think it's more, so I don't really think about it in the two different businesses like that. Certainly I don't. I certainly like engaging externally a lot. I like being able to demonstrate the technology a lot. I find that very motivational and energizing, far more than other things which will be more internally focused and maybe not so interesting. So it's not business related. I think it's more functional related is what kind of floats my boat.
I think you should tell me about your AI marketing tool, because that sounds very exciting.
So we're just about to launch this actually. And this is direct feedback from mortgage brokers asking for some help. So what we're launching is something we call Marketing Assist. And basically it's a function where a broker can come along and say, I want to choose a marketing function. It's an email, it's a mail merge, it's a blog, it's whatever that might be. And here's content I want to do, mortgage interest rate changes and stuff like this. And actually the kind of points I want to cover is the base rate changes, mortgage rate changes, impact on consumers, impact on debt, whatever that might. So you give it context and stuff like that. And then it automatically produces effectively the right contact in the right context, which is not dissimilar to ChatGPT functionality, but apart from, we link it into far more LLMs than just OpenAI. We tailor this to make sure we're getting UK language context, and we tailor it behind the scenes to make sure it's mortgage biased as well. So what happens is we generate a tool, a user interface over multiple LLMs that allows this kind of mass kind of Google search to happen. And this really highly contextual, high quality marketing output messaging comes through that in exactly the format that broker wants to utilize in their marketing tool. So this is something that we built. This is almost like a side hobby for us, because we're using the underlying technology to automate far more data-driven solutions, but we can see how we can do this. And lots of brokers have asked us if we can help automate their lives. And this is one of the things we're doing. We're launching it at a conference in about a month's time. And that will then go live probably sometime in November to any mortgage broker in the UK.
That's really cool. Very exciting. Again, it's that core message of you're making their lives easier. You're automating the work.
absolutely for brokers. That is exactly what it's about. Get your decision. There's a bit of a red herring in all this stuff. No one really needs a fast mortgage. It doesn't really happen. It's not really important. And it's also quite an emotive decision. And you could argue that doing a fast emotional decision is not necessarily a good thing to do. But what people really crave is control and certainty. That's what causes the stress point. So if you go and ask anybody who's what the top 10 things that are most stressful in life, it's divorce and death and driving tests and getting a mortgage, buying a house. And it's what we're trying to do is take that stress away by giving certainty and giving control to either the borrower or the broker. So they're in control. If they put the data in correctly, they'll just get a fast decision. If they put the data in incorrectly, it will tell them it's not correct, because we can't make a decision. Nobody can make a decision, but it tells them instantly in our process. So we're giving them the ability to drive the process as fast as they possibly can, or as fast as they want to drive the process. And that's about control. And that's what's really exciting about it. Fast mortgages is a soundbite that gets talked a lot, but it's not really the consumer benefit that they want or we're trying to provide. Control and certainty is absolutely the key points here.
What I was just thinking about is my days back as a broker. Obviously, I ran my own brokerage as well. And we were trying to speed up the front end consumer part. We couldn't affect the lenders back then in 2015 or whatever. We bootstrapped. That was the Habitos, the Trustles, who could actually lobby and had 30 million in the bank. But one thing that, even though we sped up the consumer journey because we knew how to do that, what I found, and not this, I love what you're doing. I'm just, from a human element, if I had a case that was 50-50, that did fit criteria in theory, and I would ring up a BDM or I'd ring up the underwriter and we'd have a chat, and actually we'd probably end up getting that case through. Whereas if it was done, not necessarily automatically, but done in the set way and had to stick 100% to the rules that you've given, it is that I can see everybody, but is there anything like that you've got? Because I think from a broker perspective, that's something that I would still want the ability to discuss and see if there's a way that not we can get around it, but that we can make a case fit, for example. Or is that not what you're going for?
No, absolutely. Individuals are annoyingly individual, and we are all that. So no matter, you could be a great credit risk, but you're still individual, and you might be buying a property that's quirky, or you might just have whatever thing in the past. There is no vanilla. Is very hard to find because there's always something. But there's a difference between manually underwriting a case and individually underwriting a case. So what I would say, you're talking to many lenders, and what they will say, they've given you this manual option to talk about a case. What they're really doing is individually underwriting it. You're explaining the situation so they understand it and so they can individually underwrite that case. The only difference is they have chosen to do it manually. Yeah. What we're doing is saying our process is completely dynamic and it is individualized 100% of the time. It's non-standard all the time. Yeah. So what most technology businesses in mortgages have tried to do, and I did this, I remember I walked into my job at Hong Kong and there was a big mortgage business there, and as a new shiny CEO, first thing I did is said, I'll make a difference and let's get our application to offer down from 28 days to 5 days or whatever the goal was. And after 4 months of a very talented team working, we shaved about 2.5 hours off that journey, and actually made a lot of things worse because we standardized it. We tried to get all the same questions answered in the same way so we could standardize our process. And it's fundamentally the wrong way to do it. We do the opposite. We individualize it. So we consume data and we look at the data and we ask questions on it. So many times there'll be, let's say, I've just started a job, so I'm in my probation period, or there's a variable piece of pay here, or whatever that thing will be. It will flag that up as a failure and the broker will be able to interact with it. And as soon as the broker clarifies the data, that can trigger a manual response and we can send it to a human being, or it can decline it because it's just a fail, or we can accept it in this process. But what we want to do is we only want the humans to do value-adding work and be very precise about that, and the system directs it to it. As soon as that task is done, okay, we've got that variable pay bit sorted, put it back on the conveyor belt, everything else is automated. So it absolutely is designed for that situation. And you asked me before, what's our biggest challenge? My biggest challenge is getting people to understand that. So I was at a conference about 3 weeks ago, a mortgage conference this was, and I asked people to put their hands up and said, in your lifetime, will you drive a driverless car? And 98% of people put their hands up. I then said, in your lifetime, will all mortgages be automated? And about 30% of people put their hands up, yeah? Now, both of these are data problems, very similar data problems. One is equivalent to flying a kite, and one is sending a rocket ship to Mars. Now, everybody believes they can go to Mars, but no one can believe they can fly a kite. That is, how weird a scenario is that? So my biggest challenge is to get people to understand that just because it's technology, it doesn't mean the computer says no. It doesn't do that. It's individual underwriting. We've just asked technology to do it instead of a human. That's the difference.
That's brilliant.
I love that
Really?
analogy. You perfectly summed up most of the issues with both the property and the finance sectors.
But it is amazing, absolutely. I do that quite a lot, that driverless car analogy, and it is. And then I explain it to them. I say, you're voting for Mars, but this kite completely out of your goals. Fair enough, but it is a concept. I mean, and I make fun of it, but when I was running banks, I would have done the same thing. I did not understand. I did not understand the capability of AI. I did not understand what it did. It was this mystical thing where you press a button and everything happens. Clearly, it's not like that. And so there is an educational piece here that we really got to champion to help people understand it. AI is going to come in the next generation. It is going to be the biggest sweeping change of the next generation. The world is not going to look and feel the same 10, 15 years from now, and it'll all be driven by AI. And we need to help people understand that. We need to understand genuinely how this is going to impact lives and help people react to it and educate people to it. And I'm very passionate about that because it's not the end of the world. It doesn't mean that we're all going to have no jobs and all these sort of things, but it does mean we're going to adapt and we're going to change like we have done before. And it should be an exciting period of time, not a period of time that we should dread.
And so obviously there's probably about 1 million startups now talking about AI and what they're going to do with AI and all that sort of stuff. Obviously you're way ahead of the curve with that, especially in the sort of fintech sector. But what advice, obviously getting past the early adopters to the next stage seems to be something that's going to have to happen. But what advice would you give to people with a tech startup looking to do stuff with AI, if they're just using it as a buzzword, or if they actually understand it and have that tech background as well? What advice would you give to them in any sort of tech industry, really?
Yeah, I mean, again, I was not an entrepreneur. I never set a business up before this one, and you learn a lot. So particularly with AI, though, data is the first problem. Yeah, you've got to train models. Now, you can have kind of veneer and user interfaces sitting on outsourced AI models where you're doing very light development work in reality, but creating a great user interface. Completely good business strategy. Some of the stuff I've just talked about, marketing systems, it's like that. Nothing wrong with that. It needs less data in that process. But the reality is, if you're genuinely building innovative AI models, you need data for whatever problem that particular is. It's hard to get, particularly in the financial services, because of GDPR. We had to work really hard and do lots of things for free to get people to give us data in a compliant, legal, friendly way. Very difficult to do that. And the second thing is then to create a genuine commercial purpose for it and to be able to demonstrate this commercial purpose. There are lots and lots of AI startups who are super smart and clever, and they're building these theoretical models that at some point in the future, I'm sure will have a commercial impact, but it's hard to see it at the moment. We've taken a very different approach. Everything we do has an immediate and measurable commercial impact. And that could be speed of a process or capacity or a cost reduction because we don't need a human being to do a piece of work, but immediately it makes it very tangible. And the third thing we did, which is very difficult for most people to do, and one of the hardest things we did, is we launched in a regulated environment. So we have proven our technology beyond doubt. We are regulated. We're a regulated mortgage lender. It's one of the highest regulation steps you can get, and we have to meet all the requirements of any regulated entity, and we still deploy AI into live all the time, and therefore we perfect, but also knowing we have confidence of its performance and capability. Look, in a nutshell, find data, because the model is not going to be as good as you think, and people are getting smart to that. Be really laser focused on a commercial benefit, and that helps you get to revenue faster. And as a startup, particularly if you're looking at raising money today, long burn periods now are really hard to fund. So you need to get to revenue quickly. And the last point would be, if you're selling in fintech, it's regulated stuff, and trying to convince a big bank that you know what you're doing, if you're not regulated and if you can't prove it, is going to be a challenge. I'm not saying you become a regulated entity, but it's a big challenge you need to think about, because they won't deploy it unless they're confident.
That's brilliant. That's really good advice.
I think you've helped demystify a bit of the AI conversation, which is always really important when we're talking to people who are using that kind of technology. So thank you for that. Really great advice for other businesses who are employing AI.
I think when we spoke before, I think, Stuart, you suggested maybe you weren't getting either yourself out there enough with regards to promoting the company through your own, I hate using it, but personal brand. Obviously you're at these conferences and things like that, which would be expected. Do you, and maybe to Rebecca as well, do you think that improving that would help the chances of your business, whether it's something you want to do or not, or think it's valuable?
Yeah, if you look, I'm very open about this in the business. In the last 9 months, we've been very internally focused. We've developed and deployed several lines of technology, or some pipelines of technology, which will have a fundamental long-term impact on the market. But we've been very internally focused in delivering these things, because we have to deliver them to such a high standard, because we're in a regulated environment. And the detriment to that has been less time building brands, building sales and marketing. And even the people whose sole job it is to do that have also been dragged in. And so right now, I say to the team, I'm doing a big all hands call tomorrow, and the message will be it's all around delivering experience for the borrower and for the broker, and making sure that our brand is better known in the marketplace. So that is the key goal for me. In the next 12 months, if there's one thing I'll be doing, it'll be more time in the marketplace, more time with customers, more time with brokers. And that helps us perfect technology, but it also means that we're able to see more opportunities, identify more opportunities, and drive the business and grow the business.
Yeah, you've hit on something really important there, which is something that I am always banging on about and will never stop emphasizing, which is the importance of being customer centric. And at every point there where you've talked about building your brand, you've talked about it in the context of spending time with your customers, getting to know them better, and delivering exactly what they need for them. And I think your personal brand that represents the business, being so customer centric, can only ever be a good thing. And it's something that I am always encouraging people to do. So it's great to see that you've got a natural proclivity to speak about your customers in that way. It shows that they are your core focus, no matter what's happening in the business. And I think the more you can do to emphasize that as you go out to the market and talk to people and build your brand, whether that's face to face, whether it's online, whether it's doing podcasts like this, pushing that customer centric message is a really strong one. So you've got the right thing going on there.
Yeah, if only I was doing more of it in the last 12 months. So I have to critique myself, can do better, C-. So
There's always room to grow.
Don't.
And I think a lot of founders, rightly or wrongly, I'm going to say wrongly, with every good intention in the world, focus really heavily on their product and their innovation. And that's great, but only in the context of what it delivers for the customer.
Yeah, absolutely. And you've then got to be clear about, particularly in our business, who's your customer? Who pays our bills? That's a bank. Who actually appreciates the product most? It's the borrower. Who's the person that introduces the broker? So wait a minute, who are we trying to delight here? And we're actually trying to delight all of them in a different way. And that is a confusing part of a B2B marketplace strategy, which is very usual for fintech. B2B marketplace strategies, they're very common. And you are delighting multiple different people to make a marketplace happen. And it can get quite confusing and hard to focus on, particularly when actually the cool and sexy bit's the tech, and you naturally want to get drawn there as well. So it is a challenge. Deals pays the bills. And in this day and age, revenue is everything. And anybody who's looking to raise money and has in the last 12 months or in the next 12 months will know their revenue story has to be super hot at the moment. Otherwise, they are going to struggle in this current marketplace.
Absolutely.
On that point, I'm assuming you've raised. How easy or difficult did you find it? Obviously, in general, but also going into a regulated market would have surely scared us.
Unfortunately, this is obviously before the watershed, so I have to be careful about my language now. No, look, anytime you're raising money, it's incredibly difficult to do. It's by far the most difficult thing to get a business going. I'm incredibly fortunate. In reality, I've got a very strong mixture of backers. So I have some genuine deep tech VCs, and there's a lot of deep tech VCs out there that aren't deep, but I genuinely do have people that understand what we do, understand AI, and really understand the benefit. They don't get regulation so much, of course, and they don't get kind of that type of mortgage environment, but they understand what AI does. And then I have big market mortgage industry players who aren't tech experts, but are experts in mortgages who back the business as well. So I've a very diverse cap table, a very big institutions backing the business, and they're very supportive of what we're trying to do. So it is I'm quite fortunate to have that level of support, but it's incredibly difficult to build that, and it takes so much time. So much of my personal time is focused on that. And you're always raising money. We have raised money and things, but you never stop thinking about that because you never know what needs to happen next. So it is an incredibly difficult process. Diversity of cap table is a big thing I'll encourage people to do. It's hard to do that.
Yeah.
I made so many mistakes, too many to count. But I don't beat myself up about any of them because you're running fast, you're making decisions on almost no information with limited experience in a particular area, and you've just got to keep running hard and keep the momentum going and go. We talked about that situation, and it is incredibly difficult. 2016 was, in comparison today, was like a golden era to raise money. It was so much easier, and today is so much harder. But fast forward 3 years, there's still too much liquidity out there, and they can't deploy it quickly enough. There just isn't confidence in the market. In 3 years' time, we'll be in a different space again, and we'll be back into those types of periods, and to go back into that. But yeah, so I mean, as I say, lots of mistakes, but yeah, I don't really hark back and regret them, but I do hope to learn and do them differently going forward.
Thanks for joining us on the PropTech Growth Podcast. To learn more, you can find us on LinkedIn or email proptechpodcast@icloud.com. See you next time.